Well, guys, we got a lot to talk about today. It's your boy TB here at SMB. Wowee, what a day. We got our FOMC day. We got Powell talking sweet nothings into our ears, whispering sweet nothings into our ears like he usually does. And we got a lot to go over today. We got some green on the market, big green. S&P up 1% today. Nasdaq leading the charge, which is fantastic when you see the Nasdaq leading the market higher. There's so much room to the upside on the Nasdaq. It's just crazy. We'll get into all that and more. But first things first, I got to ask you all to drop a sub, please. I appreciate it. If you do, please, like I'm begging you. I I think I'm putting out some decent videos recently, giving you some good information. I'm not telling you to get bearish. I'm not telling you to get overly bullish. Today I'm going to be telling you to get a little overly bullish. But I'm just trying to be here, be unbiased for educational purposes, not financial advice. So if you appreciate it, I'd appreciate if you dropped a sub. Thank you very much. But let's get right into a lot of what Jerome Powell said, the man himself said today. So he gave us the 25 basis point hike. Everyone was expecting that. Market priced it in, and now it looks like market is thrilled. So if you could summarize a lot of what he said, it was basically, yes, we know this. That was basically what the market got today, and that is exactly what it was hoping for. The only time the market shits itself after an FOMC is when Powell comes out and he gives us something new that we kind of weren't expecting. So it wasn't all perfect, good and dandy, dovish, like, yeah, we're cutting rates, guys, everything's good. He left a lot of things very vague on purpose, like they have been, because they don't want to be held to anything. They love giving you wish-washy statements. They didn't say, yeah, we're cutting rates by the end of this year. They didn't say, yeah, we're done jacking up rates. He said that they expect ongoing increases in the rates to be appropriate for inflation, but he didn't say how much. He didn't say how extreme. He kind of just led us on to believe, yeah, we'll do another 25 basis points in March next month. But we'll see from there. And he kind of just made it sound like, yeah, we're going to leave rates higher than we might think. It was a lot of that. It was just a lot of you might think, what we might do, what might happen here. The big thing he talked about in inflation, and if you guys watch my vids, you knew this was coming. No one should be surprised. Labor market, that's a big thing. He talked about that. He talked about slowdown in growth, but unemployment's still very low. That's a huge thing, that growth is slowing down. Unemployment's still very low. So the labor market is very incredibly tight still. And labor demand still exceeds supply of workers. So that leans into that thing I was telling you guys about, the service side inflation. That's the big factor. And he really talked about that a lot today, not nearly as hawkish as I thought he would, but he talked about it quite a bit. And he just said, inflation in core services is not moving. It is completely still elevated and just not moving down whatsoever. He emphasized that quite a bit. And he also said that represents over 50% of their gauge on inflation is service side inflation. You know, he said, yeah, we expected goods inflation to stop by now. And we expect good inflations. Good inflation is supposed to be like low. It's supposed to be like 0.5%, you know, or almost like flat month over month. That's why when you see a CPI report at negative 0.1%, everyone goes, oh, we got deflation. It's like, no, that's goods, man. He doesn't care about goods. Goods is so volatile. It moves on gas prices. It moves on supply shortages. It moves on the supply chain. So he talked about that. He said, yeah, goods has already come down. We expected that, but we're looking at service side inflation, which has not moved at all. So even though that sounded a little rough to me, because I was like, yeah, that's kind of what I was expecting. The market didn't care. We just went straight up today. And now who knows if we go straight back down tomorrow. All I know is that things are looking as bullish as you could hope for. No surprises that FOMC is always going to be bullish, especially when we just broke a downtrend. We're well above that 200-day moving average on the S&P 500. We broke this local high over here at 410.50. First time we closed above 410 on the S&P 500 since all the way back here in September, 12th of September, 2022. Massive. Just taking out big levels on big volume. It's great. And now we are going to begin to see a lot of bears begin to cover their shorts. That's going to push the market higher, and not just cover shorts, but then go long. It's going to be a big rally. It's going to be pretty crazy. We're going to see SPY shoot up to like 440 in a very rapid pace. I would perhaps venture to guess. I mean, I know it sounds a little crazy. It's weird. I haven't made a video being this bullish in a while, so it's not really. It's weird. It feels strange, but What else did he talk about? He's just said a lot. Yeah, inflation's not there yet. We're happy with the clear signs that disinflation has begun, but we're still not there. A lot of that, he said, we're still, yeah, ongoing rate increases, which I thought was interesting. I thought the market was hoping to be like, was hoping for him to come out and say, yeah, we're going to raise this time and next time, but then we'll see and go from there. But he didn't explicitly say that. He kept it super vague. He just said, yeah, ongoing. So their target is 5%, I believe, and right now they're at 4.5, 4.75. So one more 25 basis point hike would get us to that 5%. And now you might ask, well, he says inflation's not dead. He says, we're still raising rates. Why is the stocks going crazy? Well, this is the tool. This is what the stock market is. It's always forward looking. It's always looking at the next 6 to 12 months. So right now, market thinks 6 to 12 months will be over here and we'll be able to finally put our flag in the corpse of inflation and say, we won. So that's why the market goes up now, because it's looking forward to that. It's always looking forward. That's always how the stocks are. They're way ahead of everything. Back here in January of 2022, everything was still rosy looking outside, but stocks were like, oh my God, we got a dump. And it's always been like that. Stocks have always just been like that. And it believes the stocks are now saying, yeah, we know earnings are going to be bad this quarter, probably next quarter, maybe next quarter after that. But this time next year, we're going to see good earnings again. That's why the market rises. And now that's why it really rises this time, because there was just so much money on the sidelines, like waiting to buy this dip. This was like the most predicted recession ever. It was the most like everyone saw this recession coming. So a lot of people were smart. They sold and they've just been sitting in cash, or they've been buying slowly. And they're ready to deploy some cash. So that is what we're going to see to the upside, I believe. Looking at Apple, full transparency, I bought some shares of Square. I was looking around. I was like, what kind of stocks are really not going that crazy today? Apple didn't really go that crazy. Apple was barely up 1% today. Apple's got those earnings tomorrow. That's going to be huge. If those are terrible, then my calls are dead. But I got a May call for 155, so kind of a leap call. We're aiming for up here. Aiming for 155 up here on Apple. Apple is very capable of having crazy rallies. It had an even crazier rally back here in June. It rallied 35% over about a month and a half. I'm looking at some kind of move like that for Apple. I like calls on Apple. It's not nearly as volatile as like Nvidia or AMD or any of those like crazy stocks that make 10% swings, but that gains aren't going to be enough. But that's why I go calls on Apple. I go shares on those other companies. And Square was the exact same way, or Block. Just didn't make a crazy move today, but still has a crap ton of upside. It's a lot of risk on assets today that were moving. Like DraftKings. When's the last time you thought of DraftKings? It was up, 10% today. SoFi was up like 7%. So a lot of these companies that make no money, they usually lose money, saw crazy moves. And these are so full of shorts that aren't going to be buying this, but they're definitely not going to hold on to something that's going to short squeeze them potentially, or they're going to cover and wait until it rises all the way to 120 and then think about shorting it again. So a lot of these unprofitable, very high risk on assets are going to start making big moves to the upside. But I believe Apple will make just as big of a move to the upside, not percentage wise, but that's why I'm in calls. I'm leveraged. If we go with 155 on Apple, I'm going to be looking at a two-bagger on my call. So I'm not completely worried. And if we do see a dip on Apple, I'm more than happy to buy it. If we get a massive dump on earnings, hey, I'm looking at doubling down, baby. We're back and buy the dip. And that's the whole point. That's the bull market. That's why if you haven't bought in, if you're still all cash, you shouldn't be feeling that much FOMO. There's still just so much upside on everything. And it's easy to get this upside now when you buy the dip. And that's the way the market used to be. It used to be, hey, you thought you FOMO'd over here, you missed out. Well, look at that. The S&P gave you a nice 10% dip right there if you'd like to buy in. You miss out, you like to buy in, is 10% good enough? And then, look at the rest. So there's always going to be buy the dip. And there's always going to be big dips, depending on what stock you look at. NVIDIA is going to have big dips. AMD is going to have big dips. I wouldn't be buying AMD now after it just ripped 13%. I'd wait for a dip. You're going to get a 4%, 5% dip on these companies. Maybe not tomorrow or the next day, but it's going to happen. These companies ain't going anywhere. The market's not going anywhere. It's always going to be there. That's why FOMO is such a silly thing to feel. And it's completely human. You're never not going to feel FOMO. But you should not base your future decisions on past mistakes especially based on FOMO. I mean, no, you should base your future decisions on past mistakes, but you shouldn't do them just because last time you were like, man, I felt FOMO and I didn't buy, and then the market did this. So now the next time the market does that, I'm going to buy back in. Most of the time you're going to be wrong. I mean, now it's just buy the dip. So you're going to get the dip. And see, I saw NVIDIA dipped last time. I was like, damn, NVIDIA just dipped pretty nicely. Or no, this is AMD. NVIDIA, we dipped from like 204 down to 190. I thought about buying. I didn't. Hey, we're going to see another dip. It's going to happen. It's just going to happen. And that's, you get the next one. So, looking at bank stocks, JP Morgan didn't do nothing. Wells Fargo, up 1%. Jeez, look at Wells Fargo. So, just a market-wide bounce. Crazy. I mean, I don't know. Not much else to say about it. It's crazy. We got the first close of 410 since September. Nasdaq, first time Nasdaq's closed above 300 since that exact same day, September 12th. Immaculate moves. Breaking the downtrend. Breaking. We got higher low, higher high. Now we have a higher high. I expect a higher low. Should we pull back? But yeah, we're back at buy the dip. So I would... If you're really crazy and you think, hey, now sellers are just going to sell this back down, you're buying puts, I would be very cautious. But I would also be cautious on just going crazy long right now. There's going to be a pullback. When you see the market do something like this, there's always going to be a little pullback. Maybe tomorrow, not so much. The day after, not so much. But it's going to happen. So do not fear. Always have extra liquid on the side to pump back in for those dips. But that's kind of all I got for you, man. I mean, Powell, So one big thing came out today. We got that JOLTS report that came out extra hot. There were more job openings than the market was expecting. And Powell was asked about that, and he was just like, yeah, that's just an indicator. We don't really care that much. He really punted the question. And that's kind of just what he did with a lot of these things. You know, I told you guys about how they were expecting unemployment to tick up a full % this year. He was asked about that. He's like, hey, you guys still think unemployment's going to go up that high? And he punted the question. He's like, we'll see. We'll talk about it in March. And next FOMC is when they give their economic projections out. They do that every quarter. He's like, yeah, we'll think about it in March. So he's given a lot of these like easy questions for the market, or easy answers for the market to easily go bullish on, very easily. And then when he would say something bad, he would just say... it would be something we expected. Sorry, I'm sidetracked looking over here. But he was hammering stuff in that I thought was hawkish, but the market just doesn't care. I'm not going to ignore the market. I mean, I thought it was hawkish when he said, hey, we're not going to see, he said, not going to see service side inflation lower without a better balance in the labor market. So he's flat out saying, yeah, people are going to have to, unemployment's going to have to go up for this service side inflation to move. And that is... Yeah, it's not great, but right now the market's like, yeah, we think it will. The stock market fully expects right now that we could go into a bit of a recession in the summer. We could see those jobs drop off a little bit. We could see unemployment. But it's to what extent does it expect it right now? It seems like it expects it to get sort of bad, but not that bad. And that's really what the stock market does. It's just a tool gauging the future. So even when he says, yeah, we're expecting unemployment to tick up, the stock market just like, well... Yeah, we expect that too, and we're ready to rip. So don't fight the rip, buy the dip. God bless everyone. Thank you for watching. We're going to drop a hot video tomorrow. We got big earnings tomorrow. Amazon, Google, Apple, obviously. We're going to drop a big old video about that. Speaking of which, we did get some earnings from Meta. They missed on earnings terribly, but let's look at after hours. Get ready for this, boys. Boom! After hours. Oh my goodness. Meta is up. What are we up right now on Meta? Meta jumped 20% after hours. They announced a $40 billion stock buyback program. And that is almost 10% of their market cap. They're buying back 10% of their own stock. Insane. Meta is Zuckerberg's crack. So a lot of the bulls on Meta were just like, look at all the money they got. They got so much cash on hand. And now we know where that cash is going. It's going back into the company. So that's fantastic for Meta. Even though they missed EPS by like 20%, they beat on revenue. So Meta is just going squeeze mode. I hate the company personally, but there's a lot of room to the upside now on Meta. I mean, Meta is back up here at 180 right now. So 183 right now on Meta. Above that it has 203. There's just so much upside, and then still gap to fill on Meta all the way up. A lot of upside. If we look at AMD, lot of upside on AMD. It's right up against this past resistance over here at 85. But above 85, you see this big box I have? This is such an illiquid like section because we just shredded through this so quickly. There wasn't a lot of consolidation, and you see that in the past. When you see consolidation, you look at the past and you're like, oh, it consolidated here, so it's consolidating over here. That's how the liquidity works. You can't just shoot through a zone that you previously consolidated in heavily until you do a little bit of consolidation. You make the next move. But when there isn't any consolidation, it's very easy. So we see AMD mount $86, and we could see AMD just go straight to 97. I mean, it can be fast over a few days. So AMD above that looks fantastic. But right now, I think any trader has to be a little hesitant to buy into something that just went 12.5% in one day. Like, it just, on paper, just sounds too stupid. But AMD, yeah, it looks great to the upside, man. What can I tell you? What can I tell you? NVIDIA, the setup is still valid. Inverse head and shoulders, broke the neckline. We broken big levels. Now NVIDIA, I imagine we will run up and at least tap 226 on NVIDIA before some resemblance of bears show up here. But then same exact thing on NVIDIA. The same thing on NVIDIA. Look at this zone where we just shat right through it. We went right from 260 straight down to 220 in this zone. And then over here we did the same thing. Over on the other side, same thing. See, that's what I was talking about. When you go straight through a zone, it makes it that much easier to just go straight back down through it. And when you go back down to that zone, it makes it easier to go straight back up into it. So, man, NVIDIA, I expect NVIDIA tap 228, consolidate, and then we'll see a big old rip up in the 260. That could happen. Its earnings are coming up in about 3 weeks. So, yeah, guys, I don't know. Hard to find a bearish setup anywhere. I don't know how anyone could possibly be bearish right now unless they're still just like, it's going to come down. The rates are bad. Powell's going to rug pull us. Like, you got to be on some hard copium. The bears right now are feeling what the bulls were feeling back in August. I mean, back in August and July, they're feeling exactly the same way as the bears are right now. They were just like clinging on to unicorns and fairy tales, and they got completely roasted. And now that's the bears right now. They're just gonna get shredded, and sucks for them. They had fun last year, but not so much fun this year. And they're gonna flip. They're gonna cover their shorts. They're gonna flip long, and they're gonna push that market even higher. Man, it's gonna be crazy. So, anyways, that's all I got for you guys. Big video tomorrow. I appreciate it. I love you guys. God bless. And God loves the bulls. Amen.